Okay, so this is my evergreen trade. This is the trade that I would do every month if I only had one trade to do for the next 5 to 10 years. And that trade is in USO, the United States Oil ETF. And the reason why I would choose this trade is because the ETF moves around quite a lot, but it moves around within a predictable range. So it's tradable between, say, 10 and 16. And when it gets anywhere near those extremes, you know that it's going to come back. It can persist at those extremes for a while, but it's got a lot of movement within a given range, so we can collect premium for trading within that range, which is why I could happily do it if I just wanted to do one trade every month and then that was it. This would be the one I'd do. Be variations on this theme. So with USO trading at 1284, which is right pretty much in the middle of its annual range, I'm going to sell both sides. Okay, so what that means is if I go out to typically 40 to 45 days, so the 40 to 50 days, so the 45-day strike there at June the 28th is perfect for this trade. And I'm going to trade both sides. So I'm going to sell premium below it and sell premium above it. If USO was trading towards the bottom of its range, I would just be trading premium, selling premium underneath it. If it's trading towards the top of its range, I'll be selling premium above it. So I'd have some sort of predictable pattern to the trades. So just these, well, these are just taking a little bit of time to load up. I really want to just try and find those deltas there. So I'm thinking, with that trading around those points there, I'm going to pick strikes of around 20% on both sides. So I'm looking at the 11.5 strike with just a 16, a 0.167 delta, and on the upside, the 14 strike with a 0.217 delta. That gives me the sort of probabilities that I'll be quite happy with. So when these options change loads, I'm going to sell a put below at 11.5 and I'm going to sell a call above at 14 to collect premium on both sides. And basically I want the stock price to stay between 11.5 and 14. If it goes outside of those ranges, then I'll have to manage the trade. But if it goes outside of those ranges, it's getting towards its extreme points, and it can be, although it can persist there, it's likely that I can still make trades around those extremes as well. So let's just see if these prices are going to load in. It's taking its time. So I'm going to sell a put at 11.5 and sell a call at 14. Let's just hit the strategy and go through to the order button, the order sheet. So I can scale this trade up a little bit. It's sort of trading around, what was it saying, 0.39 before? I'm just trying to figure it out. 0.39, I think. So I'm just going to do it at a credit of 0.40. So I'll be collecting $400 US for 10 of those. So I'd slide to submit that by there. And that'd be my evergreen trade, and I'll be quite happy to do that on a regular basis every month. Okay, that's my evergreen. Bye for now.